Hi, I'm Peter Rose, founder of Longwood Currency Trading. What's the best part of your Forex trade? What do you think the best that it gets? It's when you close the trade. It's when you get out. And it doesn't matter whether you're ahead or you're behind, you're out. You made a decision based on whatever type of criteria that you have, that there was an opportunity for your position to go to profit and for you to make some money. That's why you got in. When you get out, one of two things have happened. You either made that money and you're happy, or the trade just didn't seem to be working out for you and you got out. Both of those are great because now you don't have to worry about that anymore. Why would you put a Forex trade on and do a carry? Are you going to be able to sleep that night? What are you thinking about? Oh, I put it on and I've got a stop trailing behind it. Well, okay, that's fine. But you have to know when to do that. You can't just take a position and it goes a few pips in your favor and you throw a stop on there and go to work or go to bed or whatever. That isn't good risk management. That's not even good trading thought. You might as well get a bot to do your trading. In Forex, it's different. The market is too massive, as I've said many times, to worry about what the fundamentals are and all that other kind of stuff. You have to be aware of what the economic characteristics are of the two-pair countries, and those are reflected most by their interest rate policy at that particular time, because that drives the order flow. And it's only the order flow that we need to be concerned with, the little squiggly line that goes across the screen. Let the institutional traders, the bank traders that are executing client orders, let them worry about the fundamentals and all the other crap that goes with that. Our job as retail traders is to make a few pips a day, every day. And those few pips accumulate. If your car breaks down and you need to walk somewhere, you don't have cell service or something, and so you need to walk somewhere to get somebody to help you, you're not going to take off on a run. You know, you're 4 miles out in the desert. You're going to take little steps. Well, whether you run or whether you take little steps, which do you think, from a risk management standpoint, is safer and better? If you run in the desert and you twist your ankle and fall, you could be dead. So in trading, instead of racing to put a trade on prematurely, to have profit targets that are unreachable, but, oh my God, if I could make 20 pips a day, that'd be great. Well, yeah, that would be great. Maybe some of you are trading crosses or exotics and the ATR is 20 pips on your 5-minute chart, 10 pips on your 5-minute chart. So you hold the trade for 20 minutes and you make 30 pips. Well, that's great, but when it goes against you really quick, you lose 60. You have to understand the volatility of the currency pair in relationship to its ATR. And you have to work risk management. Oh, I'm in the desert. I don't have 2 miles to run. I only have a half a mile. So I'll run to the station. Why? So you'll get there sooner. So you'll get somebody to help you sooner. So you get back to the car, you get your gas. Well, if you're 60 years old, are you going to want to run in that heat even for the mile? If you're 15 years old, do you really know what direction to go in? Do you really know what you're doing? Slow. Now, for those of you who follow my channel here who are 50 and above, you say, well, I don't have a lot of time. I'm 50. I'm experiencing job discrimination, or my body's wearing out from my job, or whatever it is. I don't have a lot of time to make a lot of money in Forex. Yeah, but if you lose a lot of money, you don't have the time to make that money back. So your preeminent process has to be risk management. You say, but Peter, I'm 25 years old. Great. Then you could press it a little bit. But see, the rules become a little different based on where you are, your age, the currency pair, your personality, all that sort of thing. Those all factor into how you view what you should do in order not to get your ass kicked. In any endeavor that we go into, there's always risk, whether it's driving a car or diving off a swimming pool or wading around in a stream. There's always something that could go wrong. You can't live in fear. And so what you need to do is learn the thing really well, learn the trading really well, the market, the order flow, the purpose of what the retail trader does as opposed to what the purpose of the institutional trader is doing. Figure out what you can do to maximize the thing that you're in. If you're a bank trader, you maximize the fact that you have access to unlimited fundamental analysis results and the support of literally hundreds of people. If you're a retail trader, you don't have that. But there's other things that you do have as a retail trader, and you should learn what those things are so that you can take advantage of them. That's all part of the risk management process, and risk management doesn't start at the macro side. It has to start at the minimalist side. So when I work with a new student who's going to take my fast track program, which is 6 weeks, that's quick. But we have to go slowly through that, whether you're 25 or whether you're 55, because the learning process is slow so that the execution can be seamless and a lot of fun. And a lot of fun means that you understand that risk management really well, and that you have confidence that the methodology of risk management that you've laid out for yourself is solid for your age, for your personality, for the time that you're going to have at being able to trade, what your job is, what your educational background is. All those sorts of things come into play when I work with the student. The commonality there is we're going to get into a live account right away after you've read the course through. Yeah, you can read the course through in a day, 3 days. Because the purpose is not to learn anything. The purpose is to learn what you're going to learn, so there's no mistakes. So you don't have to figure anything out. That's the first thing I have you do, is read the whole course. And then you're in a live account with $1,000. Oh, but Peter, I've been in the account, I've been trading for 2 or 3 years. I've traded a 4-figure account, 5-figure account. And yeah, but you're not consistent. You're not as successful as you want to be. So if you want to learn how to be successful and consistent, you trade $1,000 account, $1 a pip. Well, I can't make any money at $1 a pip. That is correct. So what do you think that we're trying to do? We're trying to learn consistency. We're trying to learn risk management. We're trying to learn that it's okay to get out of the trade. Even though that trade is running in profit, if that profit hasn't reached a certain percentage of something, you don't let it run. You don't float a stop behind it. You get out and take the money that the market has given you. Well, maybe that's only 2 pips. Yeah, but in 15 minutes, you've got to leave to go to work. What are you going to do? You're going to sit there for 15 minutes and all of a sudden you go from 2 pips up to 8 pips down? Now what are you going to do? Oh, you think that in the next 15 minutes the price is going to go to 20 pips up? You got 2 pips up. You've stayed with that position for, I don't know, 10 minutes, and it's gone up a little and down a little, and it's giving you 2 pips, 3 pips, and you got to go to work. So cut it and go to work. it's only $1,000. But you have to be able to make that same decision if it was $100,000 and each pip was worth $100. Because that's part of the risk management that you need to learn, and that's what you probably haven't received in any of the training that you've been exposed to before. And so we need to re-look at things. If you really want to learn how to trade order flow, what is the market that we're trying to trade? What's the problem or the problems of that market? And which one of those problems do we choose to solve? How do we break that problem? Because it's a big problem, right? How do we break that problem up into smaller problems that do have solutions so that we can write one rule for each problem? And each problem then can only have 2 to 4 maybe conditions. That's simple. Learning how to build a framework like that is what I teach in the Fast Track course. And it's critical. It's critical because the focus is on risk management, not on how many pips you can make. It doesn't make any difference how many pips you make. It's the fact that you make any pips at all. That's where the consistency comes in. I'm making pips. Now the question becomes, how many pips should I be able to make? What's reasonable? Well, what are the factors that are going to put a limit on the number of pips that you could make? I'll let you figure that out because those are pretty simple answer. So now how do you frame your rules around that are consistent with what you did at the $1,000 account so that you can then go to a $10,000 account or a $100,000 account or where the hell you're going to get your account to? Striving for the same number of pips, just adding more money to it. The problem with adding more money to your account to trade before you're ready to do that means that your losses are going to be the same as they are in a smaller account. You could say, oh no, I'm just losing too much money on the smaller account because I'm trying to push it too hard because I need to make $300 a day. And if I was trading a $30,000 account, I could make 10 pips a day and I'd make my $300 for the day. Psh, boom, crash, I'm okay. Oh, okay. You're okay. But what's the skill level that you need to have in order to make 10 pips? What's the skill level that you need to make 30 pips? Is there a skill level where you can make 30 pips? Maybe. But if you're in the position where you're not consistent with your trading and profitable with your trading right now, you're not going to be one of them because it's just a special person that can do that on a regular basis. On a regular basis. It doesn't make any difference if you made 200 pips yesterday because you're most likely 99.99% not going to make 100 pips today. Or again this week. Maybe cumulatively, you'll make 100 pips over a couple of week period of time. But you don't know. Could you make 5 pips a day? Oh, Peter, that's simple. If you traded before at all, you know 5 pips is simple. Great. Why don't you strive to make 3 pips? That's just too stupid for words, Peter. Yeah, okay. You make 3 pips a day. And you do that 3 days a week. That's 9 pips. Do the math on that. What's that percent? Multiply that by 12. That's not an insignificant number. And it doesn't matter whether you're trading a $1,000 account or a $500,000 account. The 3 pips is the same percent before you step back from the market. As Lao Tzu said, to know oneself is to know the 10,000 things. And so it's knowledge of ourselves. I'm sorry, getting philosophical on you. I've spent 57 years in the martial arts. Let me buy a little time with you to share that. To know oneself is to know the 10,000 things. So we're not only trying to learn ourselves, but we're trying to learn the market. And we're trying to learn ourselves in conjunction with the market. If we can figure that out, then trading that market is going to be simple. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.